finally we have the 7 new members of the Chinese Politburo headed by Xi Jinping. The market reaction was cool, Gavyn, not least because many investors saw the lineup as more conservative than expected, I guess. Are we right not to expect radical reforms?
I think it's wrong in China to sort of overemphasize the importance of the change in the administration. I don't believe that's, in the short term, a very big deal. The changes happened in a very orderly way, as would have been expected. We don't really know, to be honest, what the Standing Committee is going to do next. We'll find out more in December when there's an economic working conference, which I think will tell us what the objective is for growth next year. I think, you know, things will be okay for a while because I think the economy has essentially soft landed. I think it's avoided the real problem with real estate that could have occurred and I think hasn't occurred. But if you look over the whole of the period of the new president's sort of 10-year expected term, China's going to face some real problems. It's reaching the middle income trap, which many other countries have got stuck in, where the growth rate begins to decline. And I think from about 2015 onwards that will happen. Okay. So although I'm quite optimistic about the next couple of years on cyclical grounds, I think China is going to be in a sort of 6 to 7% growth rate for the decade, as opposed to the 9 to 10% rates that we've been accustomed to, and that's a big change.
Sushil, do you think that prognosis is priced into the Shanghai Composite? As you see, it's languishing somewhat. I mean, looking over the last 10 years, we had a big jump up, the boom, the bust. It's struggling really to clear the 2000 level now. Is that slide to 6% GDP growth priced in at these levels, would you say?
You know, valuing the Chinese equity market is more complex than valuing Western equity markets, not least because you don't know how much of an adjustment you need to make for the fact that so many of the companies are, you know, suffer from interference from the government and the public sector more generally. And you don't know how much of a discount to apply for that. But having said that, I mean, my suspicion is if what materializes is a kind of soft landing, that is, we gently go down to the sort of 6 to 7% range, which, you know, as Gavyn says, is inevitable given the demographics and given you know, the catch-up in technologies largely occurred, then I think we'd be sort of broadly okay. The scenario I fear, though, is the scenario we saw both in Japan and in Korea, which is when you started with these very high investment to GDP ratios. In both cases, you got a hard landing, in the sense the investment to GDP ratio plunged over a period of 18 to 24 months. In both cases because of external events. And that could still happen in China. And what we saw in both those episodes in the other countries is the equity market took it especially badly. And you get a vast overshoot to the downside. And if the authorities don't manage it adequately, that's still a not implausible scenario at some point in the next 10 years.
Great. Well, thank you both very much. That's it from us. For more on this, please go to www.ft.com/markets.